What is par value when we're talking about a stock? Well, if you don't know what it is, and if you don't know how to account for it, you've come to the right place, because I'm Professor Capko and I help people better understand concepts such as par value. Now I'm going to explain what par value is, but first I want to say that I believe something great is going to happen for you today. And now back to the video. Par value is an artificially assigned value for a stock that a company has in its common stock that is listed or identified in its charter. So when a corporation is chartered, a certain amount of value is assigned to each share of stock that is known as the par value. It has nothing to do with the market value for the stock. This market value may be quite different from the par value. However, we need to account for it separately from the market value, and each share of stock would have a certain par value based upon what the par value that's assigned. Many modern corporations have a par value of 0, so they don't even have a par value assigned to the stock. Others will just have a small amount, such as a penny or maybe a few dollars. So that is what par value is. Let's look at this example and we'll go ahead and account for it. In this case, ABC Inc. issues 1,000 shares of its common stock with a par value of $2 for cash at a market price of $50 per share. Show the journal entry for this transaction. Well, we know we're issuing it for cash, so our first entry is going to be debiting cash. And for how much? How much are they getting? Well, they're getting $50 per share times 1,000 shares. So they're going to get $50,000. So that's the cash part of this entry. Next, we have to credit common stock. And you might in here say $2 par, but not always. And we know that they're getting $2 of this will be for the common stock's par value. So we're going to list that credit as $2,000. Now, obviously these two don't balance, so we need another entry for $48,000 to make it balance, and that entry is going to be a credit to paid in capital in excess of par. So that's paid in capital in excess of par. So we have three entries here. We debit cash for $50,000. We credit common stock for the $2 per share par value, and then we credit paid in capital in excess of par for the remainder. If you're finding this type of information helpful, please smash the like button so this can get out to others that need it. It really helps the YouTube algorithm. All right, in this example, same company, ABC Inc. issues 1,000 shares, but in this case it's no par value or 0 par value. Common stock for cash at a market price of $50 per share. So it's going to be the same price per share. And I'm going to show the entry. Again, they're receiving $50,000, so I'm going to debit cash. For $50,000. And we need, what is the other entry? Well, in this case, because there's no par value, it's actually just all entered as common stock here. We don't have an entry for any kind of paid in capital in excess of par because it, frankly, is all in excess of par. So that transaction's slightly easier. Let's do one last example. In this case, the same company, ABC, issues 1,000 shares of common stock with a par value of $1 per share to its promoters. The stock is estimated to have a market value of $50,000. So the promoters of the company are the ones that help start the company. Before the company is up and running, the promoters are out there getting it set up, getting it organized, getting the legal and accounting work done, finding the investors. Those are all the promoters, and they sometimes are compensated for their efforts in shares of stock. And that's what's happening in this transaction. And here, the stock has a par value of $1 and estimated stock has an estimated value of $50,000, and that's in the aggregate. That's for the entire 1,000 shares. So there's an estimate done here. So we're going to do the credits the same way. We're going to be crediting common stock. You could put $1 par, and since it's 1,000 shares at $1, it's going to be a credit of $1,000. And then we have, of course, another credit for paid in capital in excess of par, and that's for the remaining $49,000. So we have $50,000 that's credited, so we need $50,000 for our debit. And what are we going to debit to? We're not going to debit to cash because cash was not received for these. Services were provided, and these were the services for setting up the company. And we're not going to capitalize it in any way because all the services are done. They're already they're not going to be of value in the future. So we're going to actually expense this $50,000 to organizational expenses. So we expense it front. We're going to debit $50,000 to organizational expenses. We're going to credit common stock for the par value, and the remainder of the estimated value is going to go into paid in capital in excess of par. I hope you found this helpful. If you did, like I said, smash the like button and go ahead and subscribe. Many of the people who watch these videos are not subscribed. It would really help me out if you would subscribe. Until next time, thank you.